Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Happy Friday to you. We've had some storms and some rain move through our area the last couple of days, and I'm sure happy to see some sunshine and warmer temperatures.
It's going to be a great weekend, I think. Time to get out and grill this weekend.
And baseball.
There you go, hand in hand.
All right. We don't have a ton of stuff to get into this week, although we kind of have some things to talk about this week. So let's kick things off and recap what happened this week in the markets.
Yeah, this week, cash cattle are 25 cents higher on the week. Those feeder cattle markets, they were closed early in the week because of Memorial Day weekend, but later in the week steadied to 2 higher. On the future side, the August live cattle futures contract was down nearly 60 cents, and the August feeder cattle futures contract closed down $1.20 this week. On the beef side, choice box beef price was a little more than $9 higher for the week this week. On the hog side, cash barrels and gilts were 50 cents higher this week, while the July lean hog futures contract closed up $1.20. The pork cutout value was also higher this week, up nearly $6.75.
All right, let's get into, you mentioned holiday on Monday. So we had a holiday shortened week this week. As we take a look at those slaughter numbers, definitely reflected in there, but also the hiccup following the cyber attack on JBS to the markets, which shut down things on Tuesday and part of Wednesday. Let's talk about those numbers.
Yeah, so if we look at the week ending June 5th, and you're correct, Megan, to remind us that it's both the long weekend as well as some of the issues at JBS, but cattle slaughter for the week ending June 5th, 538,000 head of cattle. That's down 91,000 head from where we were a week ago. Interestingly enough, it's 90,000 head below where we were a year ago at this time. So as you and I have been talking about 2020, we're now seeing those 2020 numbers start to catch up. On the hog side, 1.975 million head of hogs slaughtered this week. That's 403,000 head below a week ago and 478,000 head below where we were a year ago at this time.
So I want to dovetail off into this conversation about the disruption that happened from this cyber attacks on JBS, which we now know is ransomware. How does this highlight maybe again the weakness in our supply chain and maybe change or bring our attention to the security aspect of it and the things maybe that we need to think about and how that all correlates to markets, profitability, and ongoing price imbalance that we've been seeing in the cattle markets?
Yeah, I think so. One of the things we have to remind ourselves, we've really gotten an industry that's become very just in time from the time that cattle slaughtered until we ultimately get beef in front of whatever end user that is, with very little shock absorber, if you will, but between those points. And so anytime we have events like a cyber attack, it creates a bottleneck that we can't hardly aren't very good at handling, I'll say. And I think it has a lot to do with just got a lot of cattle trying to come to the market right now in particular, and without any excess slaughter capacity, idling any is always a concern. And of course, when that attack started, no one really knew how long it was going to last. Thank goodness maybe it's lasted a shorter period of time than some might have speculated to begin with.
It definitely seemed more like a kerfluffle in the markets, right? And a hiccup rather than something that was a complete break that we saw last year when we pushed those limits. Did the market, when we saw things open up on Tuesday, was there kind of a collective gasp and we saw prices go up and box beef prices reacted as well? And how does that lack of shock absorber impact what happens with what goes on in the markets?
Yeah, so this is where if you're trying to market on that particular Tuesday, you can certainly get caught in the very short-term situation. And so risk management, as much as you and I preach it, I sometimes go, it comes back to remind us yet again that prior to the event, had futures markets been used, perhaps you could blunt yourself from some of the effects of this. but it just reminds me to keep saying, again, we don't have a lot of extra capacity in terms of steer and heifer slaughter, and you want to factor that in as you think about risk management strategies going forward, and how you want to perhaps sell cattle.
I think it's going to probably re-emphasize some concerns about price imbalance or the vocalness of cattle producers about the price imbalance. We know that Senator Deb Fischer has legislation with companion legislation coming from Representative Hartzler in the House side of things. Does this maybe put another emphasis and some support behind a bill like this when we go to try to figure this out and maybe even things out a little bit?
So perhaps it does. And I think it's important to say we want adequate price discovery in the fed cattle business. I think we've been questioning whether we have adequate price discovery today. And of course, as we have fewer and fewer negotiated trades happening, the potential for not having adequate price discovery increases. I think what's hard, and especially for economists to answer, when is it too thin? When is there not enough negotiated transactions? And we are worried about adequate price discovery. The last thing we want, I think, in any of these markets is to talk about the price that's determined is no longer representative of where supply and demand meet. And that's what we're talking about in terms of whether or not we are having adequate price discovery today.
I'm gonna, in this conversation about risk management, markets, prices, how does what's going on with not only the lack of slaughter capacity, but now we're seeing some drought pressure and some continued drought pressure, more drought pressure, and more possibly liquidation cattle coming to market. Does that stress that whole situation even more?
Yeah, so potentially, and I think your point's a good one. And I think it's important for us to be saying out loud, be thoughtful about how you want to try to proceed here going forward. There's been so much negative and I think tough times, but if you look at what's happening as the drought is expanding, and we talk about happily a repeat of the 2012 drought, well, then what happens out there about 2023? We could be really short cattle again. And so that planning horizon for producers, I think, needs to get stretched out. Don't get so focused on what's happening today that we don't forget about where these markets could go a couple of years down the road. We have some pretty recent experience. Now, I'm not going to call a 2012 drought quite yet, but we're certainly setting ourselves up for some pretty dry weather in many parts of beef cow country.
And I think I read today that the outlook for South Dakota the next 10 to 14 days is hot and dry, and that's not good for those parts of the country as well.
Yeah, and important. All right, so the drought's happening earlier in the season when we need to be growing grass. If you think about the 2012 drought, we really didn't hit full stride of 2012 drought until we got into July, as I recall. And so the poor and very poor pasture conditions that we have today, we've not seen those this early before in the country. And I think it's coming at a more critical time when we ought to be having more grass, not less grass. I don't know if we can recover in a South Dakota very well, even if we start to get some significant rain, just given where we are in terms of the growing season.
There will be plenty for us to talk about in this realm over the next weeks and months as we move through the summer and we watch Mother Nature unfold to see what happens there. Scott, really the one big report we had this week was jobs report, and coming in a little bit under expectations, pre-report expectations, correct?
Correct. So we had 559,000 jobs added in May. That actually resulted in a 0.3 percentage point decline in the unemployment rate. So we fell to 5.8%. So not all bad news in terms of what we got. We actually got a little bit of, revision to the April jobs number up a little bit from where they would have originally suggested. And so not all in all bad. Leisure and hospitality saw a pretty notable job gain this month, which isn't surprising. I think this is another piece of the COVID-19 recovery. Everybody's ready to get out and get about, and leisure and hospitality is certainly leading the way in the numbers that we got today.
We're still recovering on the job side of things. When we look at, and I'm going to tie this back to supply chain disruptions, demand for beef, pork, meats in general is strong. People are now wanting to go out to restaurants. They're still grilling at home. They're still doing all of these things. But if we don't see a rise in employment or continue to see job growth, do we get concerned about pricing our consumers out of our proteins?
So potentially, and I think it's a critical point. So we used to talk about we need more shackle space, right? And I go, no, we don't need. Well, we might need more shackle space, but if we don't have the labor to go along with it, that shackle space doesn't help us very much. And I'm afraid we're getting ourselves in that situation where labor could be more of the problem than actual physical capacity if we aren't careful. And that's not the solution we want to have. That's an industry that's smaller, all else equal. Now, price ourselves out of the market. I come back to say, to me, we're talking about higher pork prices, higher beef prices, higher chicken prices. So we're getting all of those going up. So it's not that one meat industry is out competing the other. Do we lose out to other things? Maybe we can talk about gasoline as folks would return to driving more. So sure, that's a possibility. I just don't know at what point consumers say, wait a minute, I'm not going to pay these higher prices that I'm seeing in a number of areas right now. And what that means then ultimately for meat demand, do consumers at some point back away enough that what's been a pretty strong ride all of a sudden isn't such a strong ride going forward?
It's because our meats, like beef and pork and chicken here, is so good. Like high quality, it's good, it's affordable, and it's the best there is.
Absolutely. And I think this resonates so well of, folks were ready to get out of COVID-19. And one of the things they want to do is go out and eat a really good meal. And I a lot of times say that's center of the plate steak. The pork industry might not like me for saying that out loud, but it just reminds you that price probably wasn't as important as quality of the product. And we certainly put some good stuff in front of consumers in both the beef and pork markets.
Scott, it's great to see you as we look ahead to next week, a very busy Friday for us. What reports do we have coming out?
Yeah, midweek we'll get monthly trade data, and then we also get USDA's monthly WASDE report, retail prices, and we finish the week with consumer sentiment.
All right. I hope everybody has a sunshiny weekend, is outside and grilling, and can enjoy this beautiful weather if you have it. We will see you next Friday.
Sounds good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments as well. Have a great weekend. I'm Megan Grebner for Brownfield.